Okay, good morning, subscribers. It is Monday, February 24th. As I told you on Friday, I'm actually coming at you remotely from Davos, Switzerland, where I'm actually taking a little bit of time off with some snowboarding. While also visiting actually two clients. It turns out that we're here. So for this week, I'm definitely gonna be present, but I'm gonna be a little bit busy, of course, with some of the things that I just said. So we'll do some trading if there is stuff to do, and I think there should be. So let's just walk through the tape. So I have the SPY up here, SPY. S&P 500 ETF, and you can see pretty much we're just bumping up at this level here. At some point, this level of resistance will give. So I have a couple of clients who actually ended up buying out of the money calls to take advantage of the opportunities that are potentially present here on a breakout. Um, on the QQQs and Nasdaq 100, we are obviously leading this tape, and I have a couple stocks that I'm looking at on that end. So you can see Nasdaq 100 making a new high relative to the January highs, and then the Russell 2000 still, like I said last week, also perking up. Again, hasn't yet overcome its January highs, but it certainly looks like it can get back there pretty soon here, as long as we don't get any major dramatic reversals. Quickly into the price action in terms of trading action on my part on Friday morning, i.e. for the all of Friday. We had option expiration day taking place on Friday, so there really wasn't a whole lot of reason to take the price action there too serious. Um, so basically, I ended up stopping myself. To be honest with you, prematurely out of the Amazon.com short trade. I'm actually looking to re-enter this trade today if I get a chance. So the level here, I just got a little bit scared on the option expiration on Friday, so I prefer to take some money off the table when I don't feel comfortable with the trades. That's just what I did. So we lost 1.17%, so not quite 1.2%, 1.2% on this trade. But again, I still think actually the stock still looks good to go short, so I may look to re-enter that on the short. That AIG on the long side, I closed this trade because it showed no follow-through commitment after that one-day rally last week here that pushed the stock back to past the 5100 moving average. So again, just some stocks are moving, some are not. Quite frankly, last week not a whole lot of stocks actually really moved. So this was just a testament to some of that broader price action. So I closed that trade as well in AIG for a loss of 1.6%. And I think in terms of no, then I bought Microsoft. That's the last thing I bought, and that's also on the watch list still. I think the stock looks good. If you go back sort of through a long period time frame back to 2001, the area around $38, $39 has offered resistance for a long time. And if we sort of consider the inverse head and shoulders pattern, or just focus on this, abyss capitulation sell-off into 2009, then we have a very clear neckline, or just area of resistance to be able to overcome that we're at right now. So if we zoom in very closely, then on Microsoft. You can see that basically the near-term chart looks equally bullish, with last Friday having marginally overcome this near-term resistance area around $38. So we're actually just at 38. I'm sorry, we just broke out of this little consolidation area here. So it looks like this stock's ready to move certainly towards 39, and then I think it's got room towards 41. And if it were to do that, it have major implications on the big chart that I just showed you before. So that's the stock I went long with on Friday, and quite frankly, I think that's all I did on Friday. So in terms of open positions, let's quickly go through some of the open positions. I think most of them still look very good. There are a few less, of course, now that given the move that I just told you. Um, let's see. Here we go. So we're still long Goldman Sachs. I'm going to go through these very, very quickly here. I don't want to take too long on this. Goldman Sachs, again, just like AIG, stock is just stuck here, so there's not much to do here. ABX, we are long this as well. This is the gold mining stock. You can see this, like keep pointing on every single morning. It's just this area of resistance that we've broken past, And so that's what we're doing here. Ryder, also still long Ryder, which is acting well on Friday. Actually had a really nice follow through buying out of this consolidation, so past resistance here. So that's really good. GILD, which is Gilead Sciences, that is the biotech healthcare company stock. It just looks like it's coiling up still. On the back of this very strong bullish candle here on the 7th of February. That looks good too. Short US steel, that looks good too still. That's the other short position that I have open as opposed to the short positions in Amazon that I prematurely closed. So I'm still happy with this one. Tesla, those options are looking good. Basically, the stock just looks like it's popped too far. This is if you want to go back on the rationale of this Tesla trade, maybe look at the blog. I don't want to go through the whole thing right now. GMCR. Man, we have a lot of positions open. I mean, we need to trim some of those positions over the next couple of days. Green Mountain Coffee Roaster, nice follow through buying on Thursday that broke us out of this consolidation phase on Friday. Just an unchanged day after option expiration. IRBT, iRobot also option expiration, very heavy, action there, but the stock is just consolidating here at these highs. Looks like still looks pretty good. So that's pretty much all I got. The one stock on the watch list that I'm really consider looking at pretty closely today will be Oracle. I pointed this stock out the other day. If we can get Oracle to break past around $38.50 mark, I think we have something nicely on the upside. So hope this makes sense. Any questions, please let me know. Have a great trading day and take care.